Hi guys, Vipin here. One of my students requested me to do a video on RBI. Now, I have done a video on RBI before, but nonetheless, here is a much more simplified video when it comes to explaining what RBI actually does. Now, firstly, RBI is considered to be the central bank. Now, in any country, when you call a bank as a central bank, it means the bank is into regulation work. They are not into opening of accounts, fund transfer, current account openings, things like that. They are mostly into regulation of banks. Now, for example, in India, you have RBI, which is the central bank. In America, you have something called as the federal bank. Now, there's a slight difference between the federal bank and the RBI. For entire India, you have just one RBI. But for federal banks, you have different federal banks for different zones or states in America. Now, RBI is a fairly old institution and they've been established since 1935. Now, RBI did not get its full power until India got its independence. But what makes RBI such a special institution is the kind of work that these guys do is pretty awesome. Now, when I say the kind of work they do is awesome, is because it's because of this bank, India has seen so much of financial stability. In 2008, there were dozens of banks in America that shut down because of recession. Lehman Brothers was the biggest, I could say, when it comes to closing down in 2008. Even though the recession was more or less a worldwide phenomenon, I never saw a single bank in India face any financial crunch or get into severe losses because of what happened in 2008. And that's only because RBI has ensured such strong degrees of financial stability. That's what makes this institution so powerful, and that's what makes India so financially stable. I mean, RBI has done a really amazing job for something like that. Now, let's look at what RBI does. Firstly, currency control. Controlling the amount of notes in circulation is one of the things that they do, but I'm more fond of the security that they put in for these currency notes. I mean, just look at the detailed printing that is there on these currency notes. You would be surprised. Just look under a magnifying glass, just put up a 10 rupee note or a 100 rupee note, and you will see how detailed the patterns are when it comes to printing. And you might have seen this in the news recently. RBI came out with a rule that said if you have any of these old 500 rupee notes, wherein the date of printing of these notes, that is the year of printing on these notes, is not there, then you are required to give it back to the bank and exchange it for a newly printed 500 rupee note. Now, that again is one of their functions when it comes to maintaining security. Counterfeiting is a huge problem in the country, and RBI is doing as much as they can to increase the security on these currency notes. And then CRR and SLR rates. I have mentioned this before in another video. CRR stands for cash reserve ratio, SLR stands for statutory liquidity ratio. Now, there is a certain amount of cash a bank has to maintain with RBI. That is, they should take cash from their account and leave it in RBI account. That is what they refer to as CRR. The other one that is there is SLR, that is statutory liquidity ratio. This is the amount of cash a bank must leave idle in their own account. Now, they have this because this is one of the ways in which RBI is able to control inflation. Okay, if they reduce the CRR, okay, if they reduce the CRR, the bank has got more amount of funds it can give out in the form of loans. When that happens, there is a good possibility that inflation will go up. So RBI plays around with these different rates, CRR and SLR, to ensure that inflation remains stable. One more thing that they do is they are lenders to banks, and also they borrow from the banks as well. Also, a way to control inflation again. Repo is what the banks go about borrowing when it comes to RBI. That is, when a bank wants to borrow money from RBI, they need to pay a particular rate of interest. That's what they refer to as the repo rate. The other one is reverse repo. When RBI wants to borrow money from a bank, that's what they refer to as a reverse repo rate. Of course, the reverse repo rate is always lesser than the repo rate. RBI will pay you less in case they borrow money from you. You pay more to RBI when you borrow money from them. That's one of the biggest revenue sources for RBI. Then, general banking regulations. One of the new banking regulations RBI has put in is when it comes to gold loans. Now, when it comes to gold loans, there were a lot of people who would play around with the value of gold. Now, RBI had recently said that 60% of the value of gold can be given out as a form of a loan. That is, if I deposit 100 grams of gold, I can get only 60% of the 100 grams market value of gold as a form of loan. Manappuram's biggest business is through this. So what these guys would do was, since it's only mentioned as value of gold, they were able to play around with this rule, slightly bend the rule. So what these guys would do was they would consider the market value of gold plus the taxes on this, plus the wastage on this as well, and come to a big total value. Let's say for 100 grams of gold to make it into a jewelry, you would lose 5 grams of gold. So the actual value they would consider would be 105 grams and plus the taxes that you may have paid on buying this gold. So that would be a bigger value than just looking at the market value of gold. And these institutions could give more money to the borrowers. Now, RBI came out with a rule that said when we mentioned value of gold, it's just the market value. You can't go about adding taxes, you can't go about adding wastage and any other value that comes to your head. That's one of the rules that they put in. They are very, very strict when it comes to the movement of money and the way in which banks operate. Then, issuing banking licenses. This is a big thing in the recent news. One of the criteria when it comes to acquiring a banking license is a capital investment of 500 crores. That is, you should have minimum capital of 500 crores. The old rule was you're supposed to have 100 crores. Now they've increased it to 500 crores. You can see how big the capital investment is. So when that happened, there were a lot of bidders for acquiring a banking license. Now, there's a difference between a banking license and a non banking financial company license. In the case of a banking license, you are able to accept demand deposits. That is, I deposit money now and I can withdraw it anytime I feel like. Non-banking financial companies, they get a different license. When I say non-banking financial companies, I mean Shriram Chit Funds, Manappuram, Muthoot Finance. All these guys come under non-banking financial companies. Getting a license for that business is significantly easier than trying to get a banking license here. So that's one more thing that they do in order to get a banking license. It's fairly a difficult thing these days considering the new regulations by RBI. Then, one last important function of RBI, that would be the money market regulation. Money market is for short term borrowings. That is, you can borrow money for 1 day or up to 1 year. Now, there are a variety of money market instruments. So, one of my favorite being interbank deposits. Like, for example, there is a bank which is short of funds, they're a deficit of funds, and they need to borrow money from a bank that is surplus of funds. Now, when the bank which is surplus in terms of funds gives it to the bank that is a deficit of funds, they need to pay a certain rate of interest. That is, the bank borrowing this needs to pay a certain rate of interest. This is one of the biggest money market transactions that you find in India. A bank which is short of funds borrows money and they pay a small rate of interest. And usually the maturity on these loans are up to 3 months. And that is something which RBI regulates. There are also other money market instruments like treasury bills, commercial paper. There is even interbank, I already mentioned interbank deposits. Quite a few, in fact, when it comes to money market. Money market in India is not a very popular form of trading. The reason is there is not really a big market where you find people who are severely short of funds and they need to borrow the same from different banks. Like I said before, RBI has maintained that standard and that stability and make sure that operations by banks are carried out smoothly. So this is what you have when it comes to the different things RBI does. I hope you found my video helpful. Do subscribe to my videos. Go to my website, vipinmks.com. The URL is here. You will find quite a few interesting articles which you can read. So, thank you for your time, guys. Have a nice day. Bye.